What's up, everybody? Another day, another dollar. Today is Tuesday, the official start of Q1 earnings season, so let's jump right into it. These are the top 5 things to know today, starting off with number 1. JP Morgan released its Q1 results earlier this morning. It reported a big decline in first quarter EPS as it added $6.8 billion to loan loss provisions due to the impact of the coronavirus outbreak. CEO Jamie Dimon said in the company's earnings release that given the likelihood of a severe recession, it was necessary to build credit reserves of $6.8 billion, resulting in total credit costs of $8.3 billion for the quarter. But however, with that being said, at the same time, JP Morgan also posted record markets revenue amid the surge in volatility in the first 3 months of the year. So overall, markets aren't as concerned with the EPS miss as the stock is trading up about 1% in pre-market. On to number 2. Banks aren't the only names reporting results today. Johnson & Johnson topped Q1 forecast when it reported its results ahead of the opening bell. The drug maker boosted its dividend, but also said that the coronavirus pandemic will affect its near-term profit forecasts. Johnson & Johnson shares are trading up about 4% in pre-market. So overall, we're seeing kind of markets looking past the EPS misses and kind of giving companies the benefit of the doubt. So we'll see if that continues as the session progresses. Wells Fargo also released results this morning, as that stock will also have a lively session. So keep your eye on those 3 names. On to number 3. Besides earnings, markets will continue to focus on indications that the coronavirus pandemic is starting to ease. Despite the number of cases continuing to climb, we're approaching 2 million soon. It will likely cross that milestone in the hours ahead. We are starting to see the narrative kind of shift to when major economies will start reopening and returning to normal business operations. In the US, several states on the east and west coast are coordinating together in order to plan gradual economic reopenings. In Europe, we see that in Italy and Spain, 2 of the hardest hit countries in the continent, they're already loosening some economic restrictions over there as business gets back to normal. So overall, while it's still early, we are starting to see some signs that the worst of the COVID-19 pandemic is behind us. On to number 4. China trade data overnight showed that both exports and imports fell in March. However, the drop wasn't as bad as feared. Exports dropped 6.6% in March, improving from the 17% plunge we saw a month earlier. Economists were expecting a drop of 14%. So overall, the data out of China is also, while we can only take those numbers, at a certain grain of salt, because China has been known to manipulate these trade numbers, we are starting to see some sort of indications that economic activity in the world's second largest economy is starting to return to some sort of normality. And finally, number 5, taking all this into account, earnings, coronavirus optimism, as well as better than expected China trade data, markets on Wall Street are pointing to a strong open this morning. Dow futures are up about 300 points at the moment. So overall, looks like we're in for a lively session. That's it for me for today. May the trading guys be with you. Have a good one and stay safe, everybody.